Okay, let's unpack this. We're diving deep today into Oklo Inc., the advanced nuclear company that's been making some serious waves.
Right. Especially if you're looking at it from an investment perspective.
Exactly. So our mission here is really to cut through the material you've shared, focusing on what's most relevant if you're tracking this company or thinking about the sector.
Well, what the sources show is a company developing these compact, fast reactors. They call them the Aurora powerhouse. And the idea is clean, reliable power, but, smaller scale than the huge plants we normally think of.
And the specs mentioned are pretty interesting. Outputs from 15 up to 75 milliway.
Yeah, and they can run for, up to a decade without refueling? It's a big point.
It is, and they use HALU fuel, high-assay, low-enriched uranium. What's really fascinating there is the potential to use recycled nuclear waste.
Plus passive safety features built in.
Which leads to their target markets, right? These specific high-value use cases.
Exactly. Places needing really robust, sort of decentralized power. Think remote military bases.
Data centers, huge energy consumers right now.
Yeah, data centers and essential critical infrastructure. Things that just can't go down.
So how did Oklo actually, land on the public markets?
According to the material, it was through a SPAC deal, OTC acquisition, back in May 2024.
And Sam Altman's involved as chairman.
That's right. Trading on the NYSE, ticker OKLO, started with an initial valuation around $850 million.
Okay. And what about getting the tech actually approved? Licensing progress?
Well, the NRC, that's the Nuclear Regulatory Commission, they've accepted Oklo's licensed operator topical report. That's one step.
A hurdle cleared, basically.
Kind of. And they're gearing up for their second combined license submission in 2025. They've actually upped the size for that application from 50 milliway to 75 milliway.
And that feeds into the customer side, where there's been some pretty big news.
Yeah, the sources highlight that Eielson Air Force Base deal in Alaska.
Right. Selected to build a 75 milliway microreactor there, a 30-year power purchase agreement, a PPA.
And it's noted as the first commercial microreactor contract for the U.S. military. That's significant.
Definitely. Plus, other PPAs mentioned, like with Diamondback Energy and Wyoming Hyperscale, those are 20-year deals.
Getting these long-term contracts signed this early, it's a strong signal for future revenue, locking in customers' way out.
Okay, let's shift to the financials. Based on the material, the market cap has, exploded somewhere around $7-8 billion now as of Q2 2025.
Yeah, it's seen massive growth. The stock's up something like 480% over the last year.
Wow. And it hit a high of $68 a share after that Department of Defense news broke.
That tracks. Analyst views seem, mixed, but leaning positive overall.
Like Wedbush, they have a $75 target, calling Oklo a leader for AI-era power needs.
Right. And Seaport Research has a buy, $71 target, pointing to the HALU advantage. But then you have Citi.
More cautious.
Yeah, neutral rating. They specifically mentioned wanting to see more progress with the NRC licensing first. Understandable.
And financially, the company itself, it's pre-revenue still.
Yeah, correct. Funded by investors right now. Had about $260 million cash end of Q1 2025.
And the Q1 net loss narrowed a bit to $0.07 per share.
But it's important to note that recent $400 million capital raise mentioned in the sources.
Right, which caused the stock to dip pre-market like 5-7%.
So that brings up the key question for anyone looking at this. What's the competitive edge and what are the big risks?
Okay, edges highlighted. That HALEU fuel strategy seems critical.
Definitely. It's positioned as vital for domestic supply chains, especially, moving away from reliance on foreign uranium. They're building their own supply chain.
And also this licensing scalability idea, trying to make the approval process more modular, repeatable.
Which would be huge if they can pull it off.
Sure.
But the risks, they are substantial.
Regulatory hurdles, number one. Remember that initial NRC denial in 2022?
Exactly. The updated submission is due in 2025. But it's still a major gate they have to get through.
Then there's execution risk. Getting that first plant running by 2027 or 28.
Requires massive manufacturing scale-up, successful construction. It's complex.
And capital intensity. Building nuclear is just expensive. Takes a long time to see returns.
No doubt. And as we saw with the recent raise, stock dilution is always a factor for shareholders in companies like this.
So pulling it together, why does Oklo stand out from an investment view based on this material?
It seems to be about being a first mover with Aurora, fitting national priorities, domestic energy, military needs.
And being built almost explicitly for the huge energy demands of the AI boom.
Right. Plus, the leadership team, Sam Altman, the founders with expertise, that's often cited as a plus.
So summarizing, Oklo looks like a frontrunner in advanced nuclear, catching this wave of momentum.
Especially aligned with those soaring energy needs from AI and defense.
But it's clearly high risk, high reward. A pre-revenue company tackling something very complex.
Absolutely. So based on the sources, the key things for you to watch are those NRC license milestones.
Progress on getting that domestic HLEU fuel supply chain going.
And hitting that first reactor commissioning target, 2027-28. That's the proof point.
Okay, final thought then. Considering the future, the massive energy demand coming from AI, from keeping our infrastructure running.
How significant could these kinds of compact, reliable power solutions like Oklo's Aurora actually become? Could they fundamentally reshape how we invest in energy and technology infrastructure down the line? Something to think about.